What's up, everyone? It's Caddy with MoneyVest. So markets here pulling back, I would say slightly, very, very slightly. So not really going higher or aggressively selling off. So in this video, I wanted to go over my read on the market. Obviously, go over the market updates that are very, very important. And also, of course, talk about the Nvidia earnings. So they came out, they more than tripled in revenue numbers, which obviously was a very, very important, which we talked about in one of our previous videos as well. Earnings grew substantially, yet the price action was kind of like in the middle, so didn't really move all that much after hours. And then of course we did have the FOMC minutes coming out today. I'm going to break that down, and of course the market's overall technicals and breadth indicators as well. So hope you all enjoyed this video and find it helpful. If you do, make sure that you drop a like, and don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. And again, we'd love to have you on board as a MoneyVest member. There is a 16% annual discount that's available till the end of this month. And again, you get access to all the members-only benefits, trading view charts, and all the private videos, trade alerts, trade ideas, discussion channels, text analysis, Excel spreadsheets. There's just a ton of benefits included, and I've opened up a few more spots if you're interested in joining. So link's going to be down below, and let's get started. So this right here is basically what I mentioned for my current read on the market. So this is what I said, obviously at around 2 hours after the market's opened. I mentioned that I think this is exactly when this type of analysis becomes very useful. And we have to remember that most money is made during the tail events, right? So when you look at the bell curve chart, majority of the outcomes that are sitting right in the middle of that bell curve are the most probable, most average outcomes. It's usually when the tail events, right, the lower and the upper tail, is when majority of the money is made, because that's usually the time when prices are either rising or falling rapidly, right? When there's volatility, that's when there's opportunity, right? Always, I would correspond volatility with opportunity, because when markets are moving pretty dramatically, that's when the opportunity comes in. And right now, we know volatility has been coming down aggressively. Markets have been pushing higher aggressively. And that's why our MoneyVest spreadsheets will capture these tail events. That's what they're designed to do. That's why I've created these spreadsheets, because they capture those tail events, right? So, for example, looking at the RSI reading, think about that for a second. In the last 91 years, we talked about this in our yesterday's market update. In the last 91 years, only 10% of the time, the daily RSI on the S&P was over 70. We are at 71 right now. So going into today, or this was going into today as in today, we were in the 92nd percentile for this indicator. Not to mention that we had a low VIX reading below 14, and we were in the 23rd percentile, again, a low level for the volatility. And finally, the percentage of stocks trading above their 20-day moving average in the S&P was at 86, right? That is also in the 93rd percentile. So on one hand, you've got an RSI reading and a percentage of stocks trading above their 20-day moving average, both above their 93rd percentile, something that we haven't seen very often. Only happens about 10% of the times for this one, and only happens 15% of the times in the last 30 years for this index. And on the other hand, you've got a low volatility. So bottom line is, when we look at the market overall, we're looking at an overbought, overextended market with unfavorable risk reward on the long side. However, this is what I said. From an investing perspective, long term, I'd mostly ignore these data points, because let's say that you have a longer time horizon, 5 years, 10 years, 20 years out. From an investing long-term perspective, they are not that useful, because for that matter, I mean, I'm still dollar cost averaging into VUG or SMH, or for that matter, doesn't necessarily matter how the markets are priced or how technicals are. I'm simply DCing in each week or each month or whatever frequency that works for you, right? Everyone has to look at it from their own perspective and their own strategy and their own financial objectives. But for me, from a long-term perspective, it doesn't really matter what the market technicals look like. These are only useful from a trading perspective, and also from a cash deployment perspective, as well as understanding current market technicals, the breadth behind the market technicals, and also identifying optimal risk reward opportunities. I think that's really important to understand, because these data sets that we have created are very useful. They're backed statistically, looking at historical data, and then extrapolating important numbers, right? So it's kind of trying to understand the signal in between all the noise, because there is a lot of noise, right? There's a lot of things to look at when it comes to markets. There's a lot of variables, there's a lot of macros, and we want to drill down and look at the only useful information that's available for us. So this right here, the Fed gave no indication of possible rate cuts at the last meeting, the minutes show. So the summary of the meeting held on October 31st, November 1st, showed that the Federal Open Market Committee FOMC members still worried that inflation could be stubborn or move higher, and that may need more rate cuts or may need more to be done. And at least they said in the policy will need to stay more restrictive until data shows that inflation on convincing trek back to central bank's 2% target. In discussing the policy outlook, participants continue to judge that it was critical that the stance of monetary policy be kept sufficiently restrictive to return inflation to the committee's 2% objective over time. And along with that, however, the minutes showed that the members believe they can move and proceed carefully and make decisions on the totality of the incoming information and that its implications for the economic outlook as well as the balance of risks. So, this is the language that we have heard from the Federal Reserve over and over and over again. So there's nothing new here. I mean, they are going to be looking at the incoming data. They're going to be data driven. They're going to be looking at the totality of the data, and that's it, right? They want to see inflation coming back down to 2% before they're convinced that, okay, we're going to see rate cuts. Now, they may be talking tough, right? That's exactly what we have talked about, is that Jerome Powell and the FOMC is talking tough, and the market's not buying that. Markets have seen a very significant rally, and they're still pricing in 3 to 4 rate cuts starting in May and June of next year, and that's both opening us up to repricing risk, or also at the same time, is kind of disregarding what the Federal Reserve has been telling us. So one of those two things will eventually come true. Number one, either the market opens itself to a huge repricing risk. We don't necessarily see a lot of rate cuts, and the Jerome Powell and the Federal Reserve is kind of very, very bold in their stance that we're not going to see rate cuts, and the market has to reprice all of that, because right now we're very much priced in for full rate cuts or higher in 2024. Or the Federal Reserve comes in line with market's expectations and actually gives us the rate cuts that the market's expecting and is already priced in. So one of those two things will eventually take place and happen in 2024. Now, let's just take a look at the S&P 500, which is now starting to form a bit of a cup and handle pattern according to some analysts. So this right here is what they are suggesting, a little bit of a cup here and just a little bit of a handle, which I guess does make sense because this does look like a cup and handle, which is a bit of a bullish breakout pattern. And the resistance that I think everyone will be watching right now is going to be this 4,600 level. So this right here is basically the level to pay attention to. And the moment we see a breakout above this, that's going to be a breakout above this cup and handle pattern breakout, which obviously is going to make our way up to this all-time high for the S&P 500 as well. So those really are the levels to pay attention to. But right now, of course, we're getting a bit of that rejection here at this resistance where we have previously also gotten rejected at. So this is going to be a very, very important level and, of course, an area of resistance to watch for the S&P. Now, going over to some of the other indicators here. So let's just quickly break that down. So first of all, Nvidia here coming on with a massive revenue boom, tripling in AI chips here on the back of AI chips. So revenue earnings beat $4 in EPS versus $3.37. Revenue coming in at over $18 billion versus $16 billion expected. And the CFO mentioned that we expect that our sales to these destinations will decline significantly in the fourth quarter of fiscal year 24, though we believe the decline will be more than offset by strong growth in other regions. And that's one of the things that I think we all have to understand. And look, this was a fantastic A+ quarter. I can already tell because the numbers that I'm looking at were just hundreds of percents of growth. But these numbers will not be sustainable long term, right? They will start to come down as numbers get bigger and bigger. I mean, you can't expect revenue for Nvidia to go from 18 billion to 40 billion next year, same quarter, right? If they do that, it would just be ridiculous, right? And then, of course, Nvidia would be argued like significantly undervalued if they're able to do that, but it's highly unlikely, right? Any company growing at such a rapid rate will eventually start to slow down and there will be a deceleration in growth. And before we get any further, folks, I just want to remind everyone that we do have the psychology course right now, 50% off. The coupon code is launched, and we're also doing a huge Thanksgiving sale. And all the courses, there's 4 courses now that we have built. These are all educational videos, lectures, tutorials, over 120 plus videos that I've never posted on YouTube that are available, that you will have a very, very good understanding and education on fundamental analysis, technical technical analysis, options, and psychology as well. And everything is 50 to 60% off. The coupon code is going to be Thanksgiving, and this does expire at the end of this week. So if you want to take advantage of that, definitely do check that out. And also, I want to mention the Black Friday sale from TradingView. They've never given up to 70% off. As long as I've been a member of TradingView for over 5 to 6 years, I've never seen them do 70% off. So link's going to be down below for that as well. If you want to take advantage, TradingView is literally what I use on a regular basis. I've been using it for well over 6 years. I can vouch for them. One of the best companies out there. So when it comes to the revenue growth, 206% for Nvidia during the quarter ending in October. And of course, net income came in at just over $9.2 billion. That's over a 50% margin. 50% net margin. Like, what is this company doing? Like, are they for real? This is absolutely crazy. And the company's data center revenue totaled 14.51 billion, up 279%. And the street consensus was 12.97. So absolutely blowout quarter from Nvidia here, no doubt about it. And during the quarter, Nvidia announced the GH200 GPU, which has more memory than the current H100, an additional ARM processor on board, and the H100 is expensive and in demand. We've got Nvidia said Australia-based Iris Energy, an owner of Bitcoin mining data centers, was buying 248 H100s for $10 million, which works out to be $40,000 each. Just absolutely ridiculous that, there's so many applications for these chips. It's incredible. And computing instances based on the GH GPUs are coming soon to Oracle's cloud as well. So I'll actually do a more detailed video on Nvidia later on. But just wanted to give you a little bit of an update. And the price action didn't really move much. So this right here is the after hours from Nvidia, which basically it seemed like it dropped close to 2%. It did hit a new all-time high at $508 and then dropped all the way down to $467. So again, an incredibly volatile session here. It did drop a little bit over 8%. I did mention I think the implied volatility after hours was close to 8 to 10% here for Nvidia, and kind of settled in at just under $500 at just a little bit over 490, dropping close to 2% after hours. Jeff Bezos continues to sell a little bit of Amazon stock aggressively after unloading shares last week as well. So Bezos may sell 8 to 10 million shares, which would amount to more than $1 billion worth of stocks, according to Faber. And he did sell close to $240 million worth of Amazon shares last week, and he still does own close to 10% of the company, or close to 1 billion shares right now is what he has for Amazon. Now, moving over to the market, so we did have, again, Microsoft, Apple, Nvidia, most of semiconductors and chip stocks here pulling back. Amazon was slightly down on the back of Jeff Bezos' catalyst here. Tesla was surprisingly higher on the day, 2.3%. So very, very flat day on the market, so not really a lot of movement. We did have a split sector breakdown with technology, real estate, cyclicals pulling back, with basic materials, healthcare, defenses pushing higher. And over the last 1 week, of course, we've had a lot of stocks, a lot of sectors push higher. Over the last 1 month, it's been very green, except for energy, which is still struggling a little bit. In the last 1 day, we've got, cocoa prices, sugar, wheat, heating oil, all pushing higher, with orange juice pulling back, coffee prices and lean hogs also selling off, at Bitcoin just over 36,000 and Ether just over 1,900 as well. So if you come over to the S&P 500 and where we are, it's very clear that this has been a phenomenal rally. There's no doubt about it. And RSI did slightly pull back down to under 70, and the MACD also showing some signs of kind of softening here with the histograms, as we are seeing that gap between the MACD line and the moving average starting to kind of be a little bit more narrow. But next resistance, like I said, is going to be closer to 4,600. I think that's going to be a very, very important level. That's also the level that we talked about in the cup and handle pattern here. And that's going to be in line with the level that we got rejected at in March of 22, in July of 23, of course. And that's going to be that level here. And that's also in line with the cup and handle that was presented in the other charts. So this right here is the potential cup overall, as you see. And this is the potential handle formation. And a breakout above that is going to represent maybe some more potential upside for S&P 500. So that's really where we are. Technically, there is, like I said, the market breadth suggesting that we're coming up to a short-term overbought territory, but long-term, the move may just be getting started. So that's my current read on the market from a long perspective, a little bit of an unfavorable risk-reward, but from a long-term perspective, the move could just be getting started, and it's possible that we do hit those all-time highs fairly soon. But there are some macro variables to also consider with respect to recession probabilities, inflation, and interest rates, right? Those three things obviously do drive the market, and all of that, the biggest, most important marker, leading marker to to understand all of that is unemployment. And that, of course, is going to be triggered by jobless claims. Initial claims, literally at the heart of it, is where it all starts. Initial claims and jobless claims. Talking about the NASDAQ market here. So NASDAQ here also starting to level off a little bit on the day, down about 60 basis points. So nothing crazy, but again, you can start to see the RSI, the MACD starting to roll over a little bit. We're seeing the histograms come back down. So those are some of the early signs of when the momentum starts to fade and we start to see the market roll over. Not saying that we can't go higher. We certainly can. Again, this is not a prediction, but this is simply an assessment of the risk and reward in the market and how overbought, oversold, overextended, underextended we really are in the market right now. So 14,400 is going to be that next level right here. That's going to be the target and support level right now, sitting well at 14,150 for the NASDAQ as well. Talking about Apple stock, and Apple here also down about 42 basis points, still at that support really nicely, 189, 190. RSI, MACD, you can see that we're overextended, overbought here. So, when we get to these events where the markets are overbought, overextended, there's not really much of an analysis to do because, we're already up to that level and there's not really much of a deployment phase in the market. Of course, when we're oversold like Apple was in 166, you can see the RSI literally touching 29.30. We were at an oversold level. Those were usually the times. So again, at a support, oversold here, deploy cash, maybe look at buying opportunities. And of course, since then, we've seen a very nice momentum and very nice rally back higher. And now we're on the other side of the spectrum where we're overbought and of course overextended here. Talking about Amazon starting to pull back from that resistance at 146, a level that we have talked about in our previous videos time and time again. And next resistance really is going to be all the way up to 146, and support level is going to stay put inside this green rectangle inside 136, 135 for Amazon. Talking about Tesla here, and Tesla on the day pushing higher very well, up over 241, so up 2.3%. This right here is a resistance that we talked about in one of our previous videos, and the next resistance is going to be all the way up to $250 per share. So this right here is going to be that lower high to also watch for Tesla. So this has been the lower high, lower low pattern for the company, with the support level staying put at low 200s and a resistance all the way up to 240 to as much as 250 for the company. But we're still very much in the context of this downtrending channel, lower highs and lower lows. Nvidia, on the other hand, also approaching, again, a resistance that we talked about at $500. After hours pulling back, futures right now are somewhat flat, so tomorrow is going to be very interesting how Nvidia ends up trading, and support level is going to stay put down to low 400s, and of course, we've got an RSI and a MACD, which also is leveling off a little bit, starting to show some signs of potentially rolling over. So keep in mind that we are, again, priced for perfection, unfortunately, here a little bit. And wouldn't be surprised to see some potential downside. And same thing with AMD, right? AMD on the day was down 2%. After hours was down another close to 1%, getting rejected at $121, $122. And this right here is a resistance that we have talked about with a very overextended, overbought RSI and MACD. Started to show signs of some rolling over here and starting to pull back here. And support level is going to stay put down to $112. Talking about PayPal, and PayPal here on the day was also lower, down 2.7%. Coming back down to this resistance at $56, $57. So that is going to be that level of resistance and area of rejection to watch for PayPal, and support level is going to stay put at $50, $51 per share for the company moving forward. Finally, we got Visa, and Visa here also with a very nice breakout. Like Visa up over 90 basis points, hitting a new 52-week high, $253. Actually hitting a new all-time high. For maybe. If you take a look at this number here, high was 252.67. Yes, so hitting a new all-time high for Visa. Very nice move to the upside, breaking out of this resistance, but at the same time coming up to that overbought, overextended territory, something that we need to be very careful of for Visa moving forward, especially if you're investing. All that matters is the fundamentals and the fair value, but if you're trading this, of course, technicals do matter very much for us as well. So moving over to Meta Platforms, and Meta Platforms here also pushing higher, and of course down close to 88 basis points, higher highs and of course higher lows here. Support level is going to stay put right over here at around $315 to $330 for Meta over here. So again, very nice move to the upside. Next resistance and target is going to be at $349, $350. We've got an RSI and a MACD that's also been, very much extended to the upside, and it's been pushing higher. So, a lot of the Magnificent Seven stocks in their analysis is going to be somewhat very similar because they've all kind of rallied, and that's resulted in the NASDAQ and the S&P to also move higher very nicely. And as a result, they are, just very overextended. You can take a look at the Netflix stock, right? 78 RSI, consistent days after days of momentum moving up. 485 is going to be that resistance here. Support level is going to stay put down to $452 per share. And of course, all the way down to as low as $397, close to $400. We got a very overbought and overextended RSI as well. And I know, like, it does sound a little bit more repetitive, but look, that's where we are, folks. I mean, this is the nature of the market, and this is the technicals, and this is about as objective as I can be, right? Now going over to Google. Google here also moving higher very nicely. It's kind of gapped down after the earnings. We talked about how it was a bit of an overreaction. I did a short on this as well because Google actually ended up reporting some very strong numbers, and yet the stock price was selling off. And since then, obviously, it has had a recent decent 14% move to the upside. And this right here is the resistance that we're looking at, that Google can get up to 139, 140, up to 144, and of course the RSI and the MACD also moving up very, very nicely. Not quite overbought yet, so maybe a little bit more upside to 139, 140, 144, but of course has seen a pretty significant move to the upside already. Talking about Microsoft, and Microsoft here showing some signs of, again, rolling over. You can see the price action starting to fade out with the RSI and MACD, showing signs of some potential pullbacks, and support level is going to stay put down to 366 for Microsoft as well. And finally, if you come over to Costco and Enphase, and Costco here bouncing off of some of these levels, support level at close to 575, 572, got up to as much as $600, almost $600 per share. And then starting to roll right back down. 599 was that high for more recently, 52-week high, and of course pulled right back down and now starting to bounce back up. Resistance is going to be at $603. With Enphase also showing signs of some momentum. It has rallied quite a bit, over 20-30% in the last couple weeks here. Support level is going to stay put down to $92, trading back above its 20-day moving average, and the next resistance is going to be all the way up to $108 with a little bit of a gap to fill over here as well. So hope you all enjoyed this video and found it helpful. I've got a flight to catch, but thank you so much for joining. I will be doing updates on Netflix, on Nvidia, on Tesla, on a lot of these individual companies, as well as the markets in more detail and technical analysis in another video. So make sure that you drop a like, subscribe to the channel. Don't forget, we do have the Black Friday sale for TradingView, 70% off. Link's going to be down below. And our individual courses, 50% off. Bundles are going to be 60% off. And if anybody's interested in getting all 4 in one bundle, we can do as much as 70% off. If you're interested, just let me know, message me or email me, and I'll create a specific coupon code for you if you want to get all 4 and if you haven't enrolled in any of them. So again, these are educational courses with over hundreds of lectures and videos and hours and hours of content with spreadsheets and PDFs, and literally everything that I know and understand about the markets is going to be in these courses. So again, thank you so much for joining. As always, happy investing, and I will see you all in the next video. Take care.